Ladies and gentlemen, good day and welcome to the Q4 and FY'24 conference call of Pricol Ltd. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. At this time, I would like to hand over the conference over to Ms. Purvangi Jain from Valorum Advisors. Thank you, and over to you, ma'am.
Good evening, everyone, and a warm welcome to you all. My name is Purvangi Jain from Valorum Advisors. We represent the investor relations of Pricol Ltd. On behalf of the company, I would like to thank you all for participating in the company's earnings call for the fourth quarter and financial year 2024. Before we begin, let me mention a short cautionary statement. Some of the statements made in today's call may be forward-looking in nature. Such forward-looking statements are subject to risk and uncertainties, which could cause actual results to differ from those anticipated. Such statements are based on management's beliefs as well as assumptions made by and information currently available to the management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. Let me now introduce you to the management participating with us in today's earnings call and hand it over to them for their opening remarks. We have with us Mr. Vikram Mohan, Managing Director, Mr. P.M. Ganesh, Chief Executive Officer and Executive Director, Mr. Siddharth Manoharan, Director of Strategy, and Mr. Priyadarshi Bastia, Chief Financial Officer. Without any further delay, I request Mr. Vikram Mohan to start with his opening remarks, followed by financial and operational highlights of the company. Thank you, and over to you, sir.
Thank you, ma'am, for the introduction. A very good evening to all of our esteemed shareholders who are participating in today's call. Welcome to the call for FY'24's financial performance and also Q4 FY'24's financial performance. I hope all of you had a chance to see the slides that have been uploaded, the data that's been uploaded. Our revenue from operations for this quarter on a consolidated basis has been 5,662.12 million, with an EBITDA of 725.84 million, resulting in an EBITDA margin of 12.82%, with a profit after tax of 415.02 million, a profit after tax margin of 7.33%, with an EPS of 3.41 rupees per share. For the year ended 31st March 2024, our financial performance on a consolidated basis, we've had a revenue from operations of 22,081.69 million, with an EBITDA of 2,786.42 million, EBITDA margin of 12.62%, PAT of 1,406.12 million, with a PAT margin of 6.37% and an EPS of 11.54 rupees per share. At a consolidated level, our long-term borrowings are nil as of 31st March 2024, and at a consolidated level, our return on capital employed is steadily increasing and has hit a number of 23.18% in FY'24 against 20.68% in FY'23. At a consolidated level, for the quarter that has just gone past, Q4 of FY'24, our revenues have grown at 11.09%, which has been lower than our expectations, primarily because there have been delay in start of production from 4 of our customers. Though we have confirmed volumes and LOIs and capacities for the same, we have had delay in start of production because of initial vehicle trials and launch issues, which has since got launched, and normal production has resumed from April. So this catch-up will happen in the coming quarters. Our revenue from operations for the year have grown at around 16%, slightly below our expected levels of about 19%, which also we hope to catch up in the coming quarters. This is primarily because of delay in start of production for certain confirmed businesses of ours from about 4 vehicle makers. In quarter 4, our EBITDA has grown on a like-to-like quarter comparison by 16.44%, which is in line with our expectations. And for the year, our EBITDA has grown by 18.17% over the prior period. As mentioned by me in previous calls, you would notice our EBITDA is steadily increasing in spite of high freight costs and other aberrations that we saw this year, supply chain aberrations because of the volatile geopolitical situation across the world. I am quite hopeful that our CEO and his team will be able to keep improving the EBITDA and level off at around 13.5%, which is normalized EBITDA over the course of this year. Next, please. This is the quarterly income statement, the highlights of which have been read out in the previous slides. And all the capital market data and everything has been provided in the presentation. I think without further ado, we would like to move straight to the questions. Some housekeeping points for the questions. I'm sure many of you would have multiple questions, but in the interest of giving everyone here an opportunity to ask their questions, may I request the people to join the question queue, ask a particular question, and if they have further questions, to rejoin the question queue so that everyone has a chance for questions one at a time. Thank you very much for your cooperation in advance.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants in the conference, if you wish to ask a question, you may please press star and 1. The first question is from the line of Balchandra Shinde from Kotak Life. Please go ahead. Sorry to interrupt, Mr. Shinde. We are not able to hear you. Sir, can you speak a bit louder?
Yeah. Can you hear me now?
Yes, sir. Please proceed.
Yeah. Sir, regarding our new product development, would like to know the update especially on the e-cockpit, where are we and how do we see any advancement on that towards the customer, on which stage we are?
Mr. Shinde, thank you for the question. I'll probably break that up into 3 parts and further elaborate on it rather than only talk about e-cockpit, which is a very advanced product. One of the products that was supposed to directly contribute to revenue in the coming 2 years is the disc brake, which is a very strategic product of our ACFMS division. I'm happy to inform you that with 6 customers, we have started production and ramping up both capacities and increasing LOI, and we are on track to meet our schedules. With regard to the e-cockpit, I will request our Director of Strategy, Siddharth Manoharan, to talk about it, as well as the connected vehicle solutions to other strategic projects. Over to you, Siddharth.
Thank you. Good evening, Mr. Shinde. With regards to e-cockpit, currently, as you know, we have developed the prototypes and proof of concepts, and currently it is being showcased to various passenger vehicle as well as commercial vehicle customers. It is in concept stage and discussion with many of them, and We've also announced a partnership with a Chinese company called DYW for vertically integrating the screens and other components. So at this point in time, we are well positioned to showcase these products with some of our customers, and customers have also shown interest to take it to the next stages of discussions. So as Managing Director rightly mentioned, this is a very advanced product and adoption will take some time in the market. And coming to the connected vehicle solutions, especially with our partnership with Sagros, we have showcased some of our proof of concepts to both domestic as well as international customers, and some testings are ongoing at this point in time with international two-wheeler OEMs as well, which have seen a very good response. And in this coming year, you will see some updates and information flowing in from our end. Thank you.
Sure, sir. I'll come back for further questions.
Thank you, Mr. Shinde.
Thank you. The next question is from the line of Rishabh Shah from RBSA Investment Managers. Please go ahead.
Yeah, hi, sir. So would it be possible to share the percentage increase in blended ASP in FY'24 over FY'23? Since we don't share the blended ASP as such.
Can you repeat yourself a little slower and louder, please, Mr. Shah?
Yeah, sure, sir. So I'm just asking you, is it possible to share the percentage increase in the blended average selling price for all the products of Pricol in FY'24?
I think that's a very, very, very difficult question to answer, because we sell mechanical clusters which are slowly phasing out, which is an average selling price of 300 rupees. We are selling electromechanical clusters which are slowly ramping up, which is an average selling price of 8,800 and odd rupees. We are selling low-end TFT clusters which are selling at around 1,600 rupees. High-end TFT clusters which are selling at 8,000 rupees. We are selling disc brake systems which are selling at around 1,150 rupees. We are selling chain tensioners which are selling at 75 rupees. We are selling complicated industrial oil pumps which are selling at around $800. Now, I think it's impossible to blend all of these and give a blended selling price, because we are not a commodity company and each of our products are so different in terms of functionality, systems and composition.
Okay, sir. Thank you.
Thank you. The next question is from the line of Vipul Kumar Shah from Sumangal Investments. Please go ahead.
Hi, thanks for the opportunity, sir. So, my question is, can we break our turnover between our two main product verticals, driver information and connected vehicle solutions, and actual control and fluid management systems? How much each vertical is contributing to the turnover?
Good evening, Mr. Shah. This year, the turnover has been about 69% to the DICBS and about 31% to the ACFMS. In the coming year, you will see the ACFMS contribution slightly increase to get to about 35-36% as the adoption of disc brake and production volumes of the same go up.
Sir, there is a lot of echo from your side, so would you speak a little slowly so that I can note down? Sorry for the...
It is about, Mr. Jain, is there a lot of echo from my side? Do you want me to change my mic position? Purvangi?
Sir, you're sounding clear. You can proceed.
Am I coming clear?
Yes, sir.
Yeah.
Mr. Shah, this year, it's about 69% is the contribution from our driver information and connected vehicle solutions division, and from the actuators, controllers and the fluid management systems divisions is about 31%. Going forward, the ACFMS or the latter division will increase to about 35% next year as the adoption and production volumes of the disc brake will increase.
Okay, sir. I'll rejoin the queue.
Thank you.
Thank you. The next question is on the line of Neerav Saxaria from Living Roots Analytics. Please go ahead.
Yeah, hi. Am I audible?
Mr. Saxaria, your audio is not sounding clear.
Is this better now?
Yes, sir. Please proceed.
Yeah, I had a question for the management. So what initiatives are we taking to increase our market share in the passenger vehicle segment?
We are not going to significantly increase our market share, but our aim is to get to about a 10% share of business in the passenger vehicle segment. As I mentioned in many calls prior, our focus areas are two-wheelers, commercial vehicles, and off-road vehicles, where we want to have the majority market share in India. Passenger vehicles, nevertheless, our aim is to go to about 10%, where today with Tata Motors we are at 58%, and few other vehicle makers we have just started making the foray. But my hope and wish is to level off at around 10% because and focus on the segments where we already have leadership.
So what is the current market share in the passenger vehicle segment?
It's about 6.8%.
Okay. I'll fall back in the queue for more questions.
Thank you.
Thank you. The next question is on the line of Sahil Rohit Sangvi from Monarch Networth Capital. Please go ahead.
Yeah, hi. Thank you for the opportunity. Can you please give me the split of the contribution from two-wheelers, CV, PV you've already said, and the other segment? I mean, if you can give me the revenue split for FY'24.
Two-wheelers is about 60-63%. PVs is about 6.8%. Commercial vehicle is about 25%, and balance coming from off-road vehicles.
Sorry, balance coming from? Hello?
Yes, please.
Balance coming from? Sorry, I didn't get your last.
Off-road vehicle and industrial segments like your JCB, Tata Hitachi, etc.
Got it. Thank you. I'll come back in the queue. Thank you.
Thank you. The next question is on the line of Pranay Roop Chatterjee from Burman Capital. Please go ahead.
Hi, good evening. Am I audible?
Yes, Mr. Chatterjee, please go ahead. Good evening.
Thank you. Sir, I have only one question. If I look at the two-wheeler industry, and I'm trying to compare before COVID, let's say FY'19 versus FY'24, at the industry level, in your sense, out of every 100 scooters and motorcycles combined sold, what do you think the mix was between mechanical, electromechanical, and fully digital TFT clusters in FY'19 versus in FY'24?
Sir, I will not be able to off the bat answer the question because unfortunately my brain is not so encyclopedic. But if you can send the question to our company secretary, I will get our CEO to answer that question.
Sure. Thanks a lot. I'll do that. Thanks a lot. I'll get back with you.
Thank you. The next question is from the line of Harini from Sundaram Alternates. Please go ahead.
Good evening, sir. Thank you for the opportunity. Just one thing, when you were mentioning that on the revenue it was because of delay in SOPs, is it possible to quantify as to which segment? Is it majorly from two-wheelers? Are we seeing those ramp up right now? Some color on that, sir?
I don't want to talk about specific customers, but yes, there have been across two-wheelers and commercial vehicles primarily, about 4 customers in total. And as I mentioned, by April, it's got normalized, and from this quarter, again, the SOPs are getting back to normal.
Okay, understood. I'll come back again. Yeah.
Thank you. The next question is from the line of Vipul Kumar Shah from Sumangal Investments. Please go ahead.
Hi, sir. Thanks for the opportunity again. So, what percentage of our turnover should be coming from the products which we have introduced in the last 2 years? Any ballpark figure?
Our average of NPD, what we call new product revenue, has been hovering between 20 to 25% every year, and we are hoping to keep that momentum going for the next couple of years also, Mr. Shah.
Okay. Thank you, sir.
Thank you. The next question is from the line of Pratik Patel from Chartered Capital. Please go ahead.
Hi, sir. Good evening. My question was related to the provisions which I can see. The long-term provision has been raised from 148 to 190, and short-term provision has been rising from 111 to 269. So can you just highlight the number, why it's so high?
I'll request our CFO, Priyan, to answer that question. Priyan, over to you.
Good evening. This long-term provision is pertaining to the employee benefit provisions which has increased, and the short-term provision is the warranty provision which has increased.
Okay. So thank you.
Thank you. The next question is from the line of Neerav Saxena from Living Root Analytics. Please go ahead.
Yeah, hi. Thank you for the follow-up. So what is the capex plan for FY'25 and what was the capacity utilization FY'24?
Pardon me?
What was the capacity utilization in FY'24 and the capex plan for FY'25?
FY'25, the capex plan is going to be about between 200 and 220 crores as announced over our 3 years, 600 crore capex for organic growth. This is not inorganic if any opportunities arise. Number one. Number two, our capacity utilization at a current level is hitting almost about 85%, and which is why we are now enhancing capacity and undertaking capex at our new plant in Pune, upgrading our facilities in Coimbatore and in Manesar.
Okay, and the capacity, the new capex is for which product vertical?
Across all product verticals, more leaning towards the DICBS. So it's also buildings coming up and it's so machinery, a lot of it for PCB manufacturing.
Okay. And so if I could ask one more question, what is our what about the battery management system? Like how are we going ahead with it?
That is going a little slow and has not yet reached fruition. And when the first LOI start trickling in at that quarter, we will announce that.
Okay, but we expect a high margin from this segment, right?
No, it was never a high margin. We were looking at normalized margins. That's why the blended EBITDA. And like I mentioned in my earlier calls, we are taking 3-4 new product initiatives. Not everything is going to be successful. One will be hugely successful, 2 will be moderately successful, and 1 we could fail. It is with that modicum of risk that we have entered into about 3-4 different product verticals.
Okay, sure. Thank you.
Thank you. The next question is from the line of Deepak from Barclays. Please go ahead.
Hello.
Sorry to interrupt, Mr. Deepak. We are not able to hear you.
Yeah, can you hear me now?
Sir, your audio is sounding very soft.
Hello, can you hear me now?
Much better, sir. Please proceed.
Yeah, thank you for giving me the opportunity. So I just wanted to ask you, like, in your last presentation, you have mentioned that you are going to touch the revenue in financial year 26, 3,600 crore. So it is intact. And the second question is, like, have you added any new clients this financial year, or in future you are going to add?
We have commenced some new business with new clients, especially with Honda Motorcycle and Scooter India, which is going to significantly increase our top line in the coming years. Most of it is going into production 18 to 24 months from now. Significant LOIs have been won. I don't want to elaborate more because it is, some of it is confidential. That's with regard to the question on the new customers added. In terms of share of business, yes, it's increasing with certain customers because of new platforms that we have added. In terms of 3,600 on the organic side, we are intact, about 3,200 crores. On the inorganic side, hopefully over the next quarter, we will be able to have some more clarity as we are analyzing effects under due diligence right now.
Okay, thank you. Thank you very much. Yeah.
Thank you. The next question is from the line of Karan Gupta from Varelian Capital. Please go ahead.
Yeah, hi, good evening, everybody. My question is...
Sorry, Mr. Gupta, your audio is not clear.
Hi, good evening.
Sir, maybe request that you use the handset mode and speak.
So there's a lot of echo in when you're talking.
Yeah, so using the same handset.
Sir, your audio is not clear.
Okay, now clear? It's clear?
Sir, slightly.
Relatively clearer. Please, go ahead.
Yeah. So, my question is regarding to commercial vehicles and off-road vehicles. So, how you are seeing the traction of mechanical clusters to digital clusters, because these are the segments where right now, I mean, it has been, the mechanical clusters are using. So now, how you are seeing the traction that they are shifting to digital or maybe LED?
I'll request our CEO and Executive Director to take that question.
Yeah, good afternoon. Ever since the BS6 regulation came into India, most of the mechanical clusters already have been changed to electronic clusters. From 2020 onwards, most of the commercial vehicle manufacturers are using only electronic clusters.
Okay. And capex for 25, you said 20 to 20 crore. So that is the part of your
220 crores for organic capex, which is part of our larger 600 crore capex plan.
Okay, for FY'25.
Yes.
Okay. Thanks. Thank you.
Thank you.
Thank you. The next question is on the line of Hetvi Marvia from Catamaran. Please go ahead.
Hi, sir. Thank you for the brief. So, my question was first, just want to clarify that the market share in our digital in clusters in car is 6.8, or is it the share of revenue for us in four-wheelers? And secondly, my main question was that since we have got significant market share in our focus segments of two-wheelers as well as CVs, wanted to understand where is the incremental growth that we expect from.
In passenger vehicle segment, our share of business for clusters by volume is 6.8%, which we expect over the next few years to grow it to 10%, and that's what our ambition is. Where is the incremental growth coming from the two-wheeler and the commercial vehicle segment is increasing our share of business with certain customers by displacing competition or going up the value chain by certain clusters from electromechanical to electronic and mechanical to electromechanical, thereby increasing our value.
Understood, sir. And if I may ask, do we have a number for how much contribution is from EVs, since that would be the ones that go to...
It's still very early stages, ma'am. We have now engaged with multiple EV players, almost 18 of them. And in fact, our entire Sri-City plant has been dedicated for EV cluster manufacturing, which is slowly ramping up.
Got it. Thank you.
And I'd just like to clarify here for your benefit and the benefit of all the other investors on this call, as I've mentioned many times before, our product is propulsion agnostic. So, the question of whether it is EV or non-EV or even tomorrow fuel cell or hydrogen, our product is propulsion agnostic. So really the question of EV versus non-EV does not come into play, because everything else in an EV cluster is the same. In fact, we are in almost all the top EV clusters we are present today, except for fuel level, which is physical, and petrol level. Here it is the battery level. So, the question of we have a propulsion agnostic product. I'd just like to reiterate that.
Understood, sir.
Thank you. The next question is from the line of Harini from Sundaram Alternates. Please go ahead.
Thanks for the opportunity again, sir. I just wanted to clarify...
Can you be a little louder, please?
Is it better now, sir?
Yes, please, Harini.
Yeah. So I just wanted to understand that there's a significant increase in the capital work in progress. Is it completely dedicated to the disc brake facility that we are setting up, or just a clarity on that?
As I mentioned to you, one plant is under construction. Another plant is just commencing construction. New lines have started getting constructed. new machines have started coming in and getting commissioned. So these are all capital work in progress.
Understood. Also, if you could throw some light on what is the total capacity that we'll be putting up for disc brakes?
Eventually, we will have a capacity of about 300 crores per annum. Currently, we have put up a capacity for about 120 crores per annum.
Understood. Okay. Thank you, sir.
Thank you. The next question is from the line of Nandan Pradhan from Emkay Global Financial Services. Please go ahead.
Hi, am I audible?
Mr. Pradhan, your audio is sounding very low.
Is this better?
Yes, sir. Please proceed.
Yeah. So, I would just follow up on the initial question that was asked in terms of the new product development. You mentioned that you've got 6 customers and you're ramping up capacity. That was in context to which product exactly?
Pardon me, sir?
You said that you have orders from 6 new customers and you are ramping up capacities for the same and you have LOIs coming in. So that was
new customers. 4 existing customers, the start of production got delayed, vehicle launches or vehicle ramp up, which has since got corrected, and these are confirmed LOIs. This delay in production has resulted in loss of sales in Q4, which was anticipated.
Okay. No, I mean, there was a question in context of the e-cockpit and you mentioned, so this was in that context? Am I getting it right? So you think
customers we spoke about, the only customer we spoke about which we have added is Honda significant volumes in the coming 18 months and onwards, and increase of share of business in certain customers by displacing competition or going up the value chain.
Understood. Got it. All right. Thank you. I'll fall back in the queue.
Thank you. The next question is in the line of Shikha from Time and Tide Advisors. Please go ahead.
Good evening, sir. I have just one question. I want to understand.
Can you be a little louder, please?
Am I audible?
Yes, please, ma'am.
Yes, I'd like to understand your exports for the quarter, and I think our target was to take it to 20% by FY'26. So where are we on that?
Ma'am, can you be a little louder and less echo, please? I'm not able to understand anything what you're asking.
Hello?
Hello. Ma'am, yeah, please proceed.
Yes, I was trying to understand where our exports were for the quarter and for the year and how we see that ramping up. I understand our target for FY'26 is to reach 20%. So I want to understand where we are now and where the growth is coming from.
Ma'am, I've mentioned in previous calls that is one area of failure in the company which, we've not been able to achieve the vision of achieving 20%, and we have to scale it down to only 10% from the visibility we see, especially the economic conditions in the US and Europe being much weaker than India. We are hoping to achieve about 10%, and we are currently at around 8%. And I've candidly mentioned in multiple calls, this is one area where we have not delivered on our vision or our promises.
Right, and this 10% is for FY'26, that's the target?
Yes, ma'am.
Okay, great. Thank you.
Thank you. The next question is from the line of Smith Shah from Monarch Networth Capital Limited. Please go ahead.
Hi, am I audible?
Yes.
Yes, please, Mr. Shah.
So my question is regarding margins. So I just want to understand that what has significantly changed for us, considering we are guiding for 13.5% margins going forward. Because if we see in FY'22, we had clocked around 11.7 margins and 23 around 12. So what has changed for us basically is what I want to know. Some savings and other expenses, or what is it about?
Actually, it's VAV, productivity improvements, process improvements, and we see a clear visibility to get to about 13.5% and kind of stabilize there. I've always maintained that we see a visibility of 13.5% based on our plans of how we want to do it, and we are on track to achieve that. In fact, this year our margins took a slight hit because, as you're aware, we were engaged in certain corporate battles which took up a certain amount of cost. And administrative costs which were not planned. Otherwise, even these margins would have been a little higher for this year.
Okay, sir. And one more question, if I could just ask you, and that is, have we maintained our market share in the two-wheeler cluster side, or is there some stiff competition there that we are noticing?
We have actually increased our market share, and we are hoping to further increase our market share with the LOIs that we have received, Mr. Shah. And then I can talk with, thump the table and say that, because the proof of the pudding is the LOIs that we have received.
So can you give us a number of the market share that you have currently in two-wheeler clusters?
Mr. Shah, I'd like to restrict to one question, please. Already you're on to the second, now into the third question. I think there are quite a lot more people on the queue.
Sure. Thank you, sir.
Thank you. The next question is on the line of Arpit Mangre, an individual investor. Please go ahead.
Yeah, hi. So I have this question on TSP clusters. So do we have the technology of onboard map navigation? Because like in Vita and previous iQube, what we have provided is that turn-by-turn navigation system.
We are the first in the country to provide turn-by-turn navigation on a two-wheeler in the country.
Okay, so the map navigation, do we have that technology with us?
We were the first company in India to introduce map technology, turn-by-turn navigation much before our competition in the country.
Okay. No, I am not asking about turn-by-turn. I am asking about the whole map which we can see in TSP cluster. Can we provide that?
Yes,
we do have the technology.
Okay, thank you. Okay.
Thank you. The next question is from the line of Vipul Kumar Shah from Sumangal Investments. Please go ahead.
Hi, what will be the asset turn of our expanded capacity for which we are spending close to 200 crores?
I'm pushing the team for 4.5, but I'm quite confident of achieving 4 to 4.25.
4 to 4.5, is that correct?
Yes, that's right, based on the product mix.
Okay, thank you, sir.
Thank you.
Thank you. The next question is from the line of M.N. Kumar, an individual investor. Please go ahead.
Thank you for the opportunity to ask this question. Sir, are we doing anything about a heads-up display in the passenger car area?
It's already under development. In fact, in the last Auto Expo, even in our stand, we demonstrated our indigenously developed HUD, Mr. Kumar.
Thank you. Sir, if I may squeeze in one more, can we put the market share information once used to do some 2-3 years before you use it?
Mr. Kumar, because we don't want to give it out because competitors could tend to misuse it. But
yeah,
okay. I think you would appreciate that.
Hey, understood. Thank you. Yeah.
Thank you. The next question is from the line of Neerav Saxaria from Living Root Analytics. Please go ahead.
Hi, sir. Just to follow up on previous participants' questions, so could you give us the market share for two-wheeler segment since it has increased?
No, I think this is the third time I've answered this in today's call, Mr. Saxaria. I said I'll thump the table and say that our market share has increased, and with our LOIs that is coming our way, it is going to only increase further in the next 2 years.
I'm asking you to quantify it. Is it possible to quantify it?
Mr. Saxaria, I just mentioned I would prefer not to give numbers out because I don't want it to be misused by competition.
Okay, so thank you.
Thank you. The next question is from the line of Sahil Rohit Sangvi from Monarch Network Capital. Please go ahead.
Yeah, hi sir. Thank you for the opportunity again. I just want some more details on the disc brake side, sir. I mean, which are these customers? Are they domestic? And what kind of capacity have you set up right now? I mean, you've given the...
We have added 7 customers. Again, competitive information. We've set up capacity for about 10 crores per month, and we will be enhancing capacity over the next 2 years to between 300 and 400 crores per annum.
And
based on the business expansion.
Correct, sir. No, this is good enough, sir. I mean, the kind of penetration you've got in this very competitive industry. I just want to understand what kind of ramp up are you seeing? I mean, this 130 crore kind of revenue, are you targeting to get that in 2 years with these customers? Or can we possibly...
The next 3 years, we hope to go to about 300 crores or 25 crores per month is the hit rate that we are hoping to achieve in the next 3 years.
In the next 3 years. Got it, sir. Got it. Thank you very much and all the best, sir.
Thank you.
Thank you. The next question is from the line of Kush Nahar from Electrum PMS. Please go ahead. Mr. Kush, your line is in the talk mode. Please go ahead.
Hello, am I audible?
Yes, sir. Please proceed.
Yeah, thank you for the opportunity, sir. I just had one question. What is the reason for the increase in our other expenses in FY'24?
Increase in the other expenses? Pardon me?
Yeah, increase in the other expenses.
As mentioned, we were involved in certain corporate actions this year, which added significant administrative and legal costs, which is a one-time thing, which is behind us, and hopefully, not hopefully, we will not have such a recurring cost because we engage some of the top legal firms in the country.
Okay, thank you.
Thank you. The next question is from the line of Hetvi Marvia from Catamaran. Please go ahead.
Hi, sir. Thank you for giving me the opportunity again to ask a question. So I wanted to understand that within our DIS segment, currently how much volume or how much revenue would be coming from more advanced digital and TFT clusters, and how much would be from the more traditional instrumentation clusters?
25% by volume, by value, it will be closer to 50%.
And could you help us understand how has it grown in the past 1 year?
Maybe you can write to us, ma'am, like I mentioned, because it's, and then we could give you a more elaborate answer if you don't mind, because I don't have it at my fingertips.
Sure, I'll do that.
Thank you.
Thank you. The next question is from the line of Bhaumik Shah, an individual investor. Please go ahead.
Hello.
Yes, Mr. Shah, go ahead.
Yeah. Hi, good evening.
Good evening, Mr. Shah. Please go ahead.
Sorry if I'm asking this question again, actually, because I got joined late today. Are we on track to achieve our FY'26 expectation of target of 3,600 crores revenue organic and 400 crore revenue inorganic? Are you on track with that?
We are on track to achieve 3,200 crores organic and 400 crores inorganic, which I just like to stand corrected, which is what I had projected in my earlier call. Where we have failed to achieve is 20% exports, which is going to be lower at 10%.
Okay, so now we are setting the target at 3,200 crore organic and 400 crore inorganic, right?
Yes, this is what has been maintained by me in my last two calls also, that exports is one area instead of 20%, we are now only looking at 10%, we are tracking, and that's one area where we have scaled back our projections.
Okay. Thank you so much. Thank you so much.
Thank you, Mr. Shah.
Thank you. The next question is from the line of M.N. Kumar, an individual investor. Please go ahead.
Sir, this is related to the exports related thing. We were very optimistic about Caterpillar, oil pumps and everything, etc. I think that is going on okay. Maybe the other things did not work. Can you give some color about it, sir? Yeah.
Caterpillar has worked pretty well and is scaling up. I will request our CEO also to talk about it. But one area, one thing you must keep in mind is the overall US and Europe volumes have started really coming down because of the recessionary trends and the geopolitical situation, which is half the reason. The other half of the reason is some of the customers we were hoping to penetrate, we have not penetrated because their business has not increased and they are quite happy with their existing supplier base.
Understood. Yeah.
Thank you. Ladies and gentlemen, that was our last question. I now hand the conference over to the management for their closing comments.
Dear investors, thank you very much for your confidence in the company and for helping the company scale new heights and for your patience. And we do hope to continue rewarding your patience with better and better results in the quarters to come under the able guidance of our CEO, assisted by our Director Strategy and our Head of Finance and the rest of the team. Thank you very much for participating in today's meeting, and as usual, I will meet you all again virtually for the H1 call, and the Q1 call will be handled by our CEO, CFO and our Director Strategy. A very good evening to all of you. Namaste.
Thank you, members of the management team. Ladies and gentlemen, on behalf of Pricol Ltd, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank you.